As a financial planner focused on sustainability, a lot of my clients have been feeling uneasy about the state of the markets. That we've seen oil prices spike, we've seen the war in the Middle East, and a lot of people are worried about their sustainable investments, thinking that they're losing money or underperforming. Well, that's actually not the case. So let's jump into it. It has been a wild ride in the stock market so far this year. Really, what we've seen is Trump started the war. We've seen oil prices spike so much higher because of the closure of the Strait of Hormuz. We've seen a lot of war happening, and people assume that military companies have done exceptionally well. People assume that fossil fuel companies have done exceptionally well. And when I talk to a lot of sustainable investors, they're worried that they're getting hammered, that they're underperforming, that of course, all of the evil stuff is doing really, really well right now, so that us doing less evil investors are sacrificing returns. Well, I'm here to tell you that's actually not the case, that I'm here to provide a little bit of reassurance that markets are actually a little bit more stable and doing quite better than people imagine if you're just following the news, and that sustainable investors have really been doing just fine and dandy so far this year. So really, when it comes to market performance so far this year, really want to do a quick little overview just to, show people what's going on, talk about it a little bit, and provide a little bit of speculation as to what we could see for the rest of the year. So if we didn't care about sustainability whatsoever, then there's a good chance that we would buy something called XGROW. This is the iShares Core Growth ETF portfolio. This is an 80-20 portfolio, so 80% stocks, 20% bonds. And this is the non-sustainable version. So this is the version that, if we don't care about sustainability at all, this will give us a sense of how investors have done so far this year. So right now I've got sort of the 1-year chart, and we can see that the 1-year chart looks pretty good. Markets did well at the end of last year, right? And then at the start of March this year, markets did fall somewhat dramatically, not hugely. It wasn't like a crash, but it was, an almost correction when Trump did declare war and basically started the war in Iran. At the end of April is when they sort of bottomed out, and then it's come straight back up since then. So, that's how markets have done. A lot of talk about how oil companies have done well, about how military companies have done well. And so as sustainable investors, we don't own those. So I think a lot of people in their head have it that sustainable investors are doing really poorly right now. But when I compare that, the XGROW, which is the non-sustainable version, to GGROW, which is the sustainable version, over the last year, you can see that the sustainable version has done almost nearly identical. It is about 1 percentage point lower, about 0.9% lower over the last 12 months. But really, that's not a huge amount. Oh no, instead of being up, 19.71% over the last 12 months, we're only up 18.83%. Sustainable investors have done very, very well over the last 12 months. All investors have done very, very well over the last 12 months. If we look at it since the start of the year, right, we can see that even though the sustainable version did dip down lower, it did fall more in March, especially towards the end of March, but it's bounced back up. And year to date, since January 1st, the sustainable version of this ETF has actually done a tiny little bit better. We're up 8.3% instead of 7.9%. Which is kind of amazing. Now, I'm filming this on May 14th, so this is Thursday. So things can change at any moment. I've been keeping my eye on it. But not only have we caught right back up, we're actually a tiny little bit ahead of the rest of the market year to date since January 1st. And when we scroll back even further, sustainable investors have done very, very well over the last 5 years. Again, all investors have done well over the last 5 years. We can see that there was a dip in 2022. 2022 was a year when stocks went down and bonds went down. It was a really rough year. And then in 2024, markets really roared back. And even though we had Trump in, and that was, one of the reasons the markets roared back is because people do have confidence in Trump. The stock market does anyway. But sustainable investments actually outperformed and did better in 2024. Now, we did have the dip about a year ago. This was Trump's Freedom Day, the tariff day, where he announced all the tariffs, where the stock market dropped and then came right back up. And then we did have the same thing happen earlier this year with the war in Iran, where the stock market dropped, but then has since come straight back up. And again, sustainable investors over the last 5 years, the returns have been almost identical, but actually a little bit better. That in this case, GROW, the sustainable version, has earned 55.82% over the last 5 years, whereas XGROW, the non-sustainable version, the very standard version, has earned 51.49%. So, we're up about 4.5% almost. Now that's over a 5-year period. What I want to show here is that there's a strong degree of correlation. That when the stock market goes up, they both go up. When the stock market falls, they both fall. So this is what we're looking for from a doing less evil option, is to track this standard benchmark to earn the same market rates of return while doing less evil. So it's really interesting because when I talk to people right now, I do think there's a perception out there, number one, that the economy is doing terribly, that the stock market is doing terribly. I think everyone saw the headlines on the downside, right? Like when the war started and the market fell, there were all these stories like, oh no, the market's falling. You don't get headlines when the market goes back up. Nobody talks about it. We only have the headlines on the way down. So, number one is that markets are doing very, very well right now. In general, no problem there. And that the doing less evil or the sustainable ETFs are really holding their own. It's hard for me to imagine a scenario that would be worse for sustainable investors right now, with oil prices spiking and military companies doing rather well. But these funds are holding up remarkably well. They're doing their job of earning these market rates of return while doing less evil. With this episode, I really just wanted to reassure people. I think I'm hearing a lot from sustainable investors who are worried that their investments are doing poorly or underperforming. And neither of those are true. That overall markets are doing really, really well right now. And sustainable funds are doing really, really well right now. Even some of the green stuff has done very well so far this year. We can look up, for example, some of our doing more good ETFs are having really good years. AGSG, which is the AGF Global Sustainable Growth Equity Fund, is up 10.5% year to date since the start of the year. Something like QCLN, which is the NASDAQ, the First Trust NASDAQ Clean Edge Green Energy ETF, which I refer to as the sexy green one, year to date is up almost 34% since the start of the year. So even with all this talk about, fossil fuels and in Canada, we should build another pipeline and we should expand fossil fuel production. And it's like, well, actually renewable energy is doing really, really well right now, is a lot more competitive than it was at the start of the year with oil prices being as high as they are. And so, really on the micro level, don't stress. Markets are doing fine. Sustainable investments are doing fine. On the macro level, I think is where everybody is really nervous right now. Things feel very, very unstable. And I get that. And Trump is a huge part of this, and really understanding that things feel tenuous at best. And with markets doing well, there's always this fear of sort of regression to the mean, that maybe we are due for a correction, maybe even a crash. We don't know. We can never tell what's happening in the future. There are kind of two things that I want to point out in terms specifically for green investors. Number one is that, my goodness, the oil price is going up. Like if we look at the price of oil so far this year, we're looking at $100 a barrel right now. At the start of the year, it was $57 a barrel. So the price of oil has gone up dramatically with the closure of the Strait of Hormuz and the war in the Middle East. And I don't think it's going to come down anytime soon. I think these things are persistent. I have no idea how long this war is going to last, but even if it ended tomorrow, it's going to take a really long time for that energy infrastructure to get rebuilt. So basically what's happened right now is that we've had a supply shock such that the global supply of oil has plummeted by about, I think it's about 20% of the world's oil was flowing through the Strait of Hormuz. And we're just now starting to see the impact of this, because there is a time delay for these things, that these ships, these giant ships, often take about 2 months to get from, where they got filled up with oil in the Middle East to wherever in the world they need to go to sell that oil. Well, guess what? We're about 2 months from the start of the war, meaning that the last ships to cross the Strait of Hormuz are now arriving in those ports, and there aren't going to be more ships coming. So certain parts of the world are going to start to see some very big supply shocks. Maybe you've heard about flights getting canceled because there's a lack of jet fuel right now. You might start to hear about rationing in certain countries, or return to work from home mandates because they just don't want people commuting as much. If that's a really easy way for us to reduce consumption of fossil fuels. So we have a supply shock. That supply shock is almost necessarily going to create something called demand destruction. This is a really important economic term for people who care about climate change, okay? Because this is what we've been trying to achieve for the last, 20 years, is we've wanted to have this destruction of demand. We want people burning less oil. The whole point of a carbon tax is to raise the price of fossil fuels, right? Raise the price of gas, raise the price of oil. What that's going to do is with a higher price, there's going to be less demand. People are going to look for alternatives and use less of it. Well, what Trump has done by closing the Strait of Hormuz is way bigger than any carbon tax that's been proposed. By pushing up the price of oil this high, we are absolutely seeing demand destruction. We're seeing huge interest in electric vehicles and heat pumps and all these alternative electric substitutions that, when we think about the oil crisis back in 1970, and we've had a couple along the way, but we didn't have alternatives then. We didn't have solutions. So people just really suffered. This is the first energy crisis where we actually have alternatives that are cost competitive right now. So it's really an incredible point in the green transition that I've talked a lot about, this notion of the unstoppable green transition, that it was happening, right? Last year, we saw about 80% of new energy investment or new energy generation in the world come from renewable sources, right? That's incredible. Incredible. Well, guess what? This year, it's going to be even higher because these alternatives are cheaper and because fossil fuels are more expensive. People are going to switch quicker. I have this dream, don't ask me when it's going to happen, but at some point I would love to create an awards show. I'd love to just give out like a greenwasher of the year award or different things. One award I'd love to give out is the unlikely environmentalist of the year, where I kind of pick someone who, probably wasn't their intention, but they've actually done a lot for the environment. And this year's award would definitely go to Donald J. Trump, because unintentionally, he has done more to accelerate the green transition than anybody else. Now, I don't want to underplay the suffering that's going on, obviously, by starting a war. He's done terrible things. And I don't want to ignore that. That really, it's not like I'm happy that there's a war going on. People are suffering. And again, the way that we're doing that, it's a very unruly transition right now, that I would love to have a very orderly green transition, right? Where we move very gently, but that's not what's happening. That we are going to see countries in the next weeks and months have to take some really, really big steps. And it's always the lowest income people who are going to be most affected when it comes to these big radical changes. But big radical changes are happening in the energy system. It's being forced. And all signals are that it's pointing towards an accelerated green transition. So it's a really unique time right now where, especially in Canada, I'm finding so much of the oxygen in the media is being taken up with, we need more pipelines and we need more fossil fuels. The world needs more fossil fuels and Canada can deliver them, right? That's a message I'm hearing a lot. Really what I'm seeing though globally is that none of those fossil fuel projects are going to come online anytime soon, that the quickest methods of deployment are for demand destruction using less fossil fuels and renewable energy deployment, specifically solar plus batteries. That's where, the wait times aren't nearly as long. And if you did need to build a new energy source, that's often the cheapest and the quickest one to be deployed. So, seeing a lot of really, really interesting action there. Another thing I want to point out is that I think we're headed into an El Nino. So, what I'm seeing in the news is that, we are predicting an El Nino. So there's currently a high likelihood of a strong to super El Nino event emerging in 2026. So this is something I'm keeping my eye on, right? But right now, there's a funny sentiment where it's like the zeitgeist seems to be that people don't care about climate change as much as they used to, that we care more about economic activity right? That there seems to be more support for fossil fuels and pipelines in Canada than there was even a few years ago. But I think that's going to change very, very quickly. That I think number one, the quick acceleration of green technologies, they're just going to get cheaper and more prolific, and you're going to start seeing them everywhere. And then number two is that if we have a severe El Nino this summer, fall, winter, if we start seeing the impacts of climate change, I mean, right now, weather is very wacky. It's very strange right now. We've had a bizarre spring here in Toronto. It's been very cold, right? We've had this polar vortex. Whereas on the West Coast, especially in the US, it's been very hot and dry. So I'm really worried about forest fires this summer and fall. And then I am tracking this El Nino event, that it wouldn't shock me if we start to see some major climate impacts in the next 6 months, 12 months, 18 months. So I know it's kind of a funny time for green investors. There's a sort of this perception out there that we're kind of losing the battle, that, oh, there's, sort of oil crisis. We need more fossil fuels. But really what I'm seeing is huge acceleration of green technologies. And then also, I think the potential for climate change to emerge as a major issue going into the US midterm elections that are happening later this fall. So it's going to be a weird summer, buckle in. Who knows what markets are going to do? There's definitely going to be some ups and some downs, but really want to reassure folks that at least for now, markets are doing really well and sustainable investments are doing really well. And then number two is that there's kind of a funny thing brewing right now where, I'm actually a little bit more optimistic than I have been, certainly than I was a year ago, that I do think that people are going to start really caring about climate change. And again, my heart goes out to all the people and the species that are affected by Super El Nino. That's going to suck for a lot of people. It's going to suck for a lot of plants and animals. But I do think that in terms of changing public perception and getting people more engaged on this issue, when we see these impacts happening, day by day, week by week, month by month, it becomes impossible to ignore. So it wouldn't surprise me if we start to see a stronger appetite for action on climate change. So what do you think? What's going to happen to sustainable investments later this year? Are we going to have a Super El Nino? You can leave a comment below. If you're looking for a community where we can talk about these things and you can get your questions answered by me, I'd love for you to join the Good Investing Classroom. That's where we have a bulletin board where people post questions, and we do these twice monthly AMAs, Ask Me Anythings, where people bring their questions, big and small, and we have amazing conversations about this stuff. So if this is of interest to you, would love to see you in there. I'm going to be in there all summer answering people's questions and would love for you to join. See you next time.